Hey guys, you might have heard the saying that you need to spend money to make money. However, when it comes to investing your money, whether you're investing your money in your pension or in your ISA, what you pay to invest your money has a huge impact on what you have left in your pockets today, even more so in the future.
So today we want to give you a complete guide to investment fees using practical examples. And by the end of this video, you'll learn how high fees stop your money growing, what the different types of investment fees are, how to compare fees when investing, and much more. If you love the sound of that, guys, please hit the like button, show us some love.
Yep, and don't forget to subscribe to our channel. Now, worth mentioning that today's video is sponsored by PensionBee, a leading online pension provider that's helping over 799,000 customers to become pension confident. They can help you combine your old pensions together into one simple online plan.
I personally use PensionBee for one of my pensions, and I love the fact that I have just one simple annual fee which offers transparency and is easy to understand. To get started with combining your pensions in minutes or opening a new pension from scratch if you're self-employed, check out PensionBee. We'll link to them below and above for you to check them out and get started. As always with investments, your capital is at risk.
Now, it's worth mentioning that absolutely everything we're sharing on today's video is completely our words. So no one's influenced what we're sharing with you guys. So everything we're sharing is completely authentically our own ideas for this video. All right, so let's dive straight in.
Okay, so why does how much you pay in fees matter?
Okay, so on the face of it, your investment fee might just look like a small percentage and doesn't really matter very much. So you might look at it and just think, yeah, it's just a fee I'm paying. However, investment fees do compound together with your returns over time. So you not only lose the fee itself, but you also lose that future growth that fee could have generated had you invested that money. So to illustrate this, to make it super practical, let's use a practical example. Imagine that you had £100,000 invested. Yes, I know that's a lot of money, but I want this to really sink in. Imagine you had 100k invested and that 100k was generating an average return of 6% per annum, excluding inflation, again for simplicity. Now imagine that you invested that money for 25 years, okay? I'm going to go over two scenarios. Scenario one is where you don't have any fees at all. You're just investing and getting your 6% returns. If you did that, 100k in 25 years would generate a return. You would earn a return of around £330,000. So you'd end up with a pot of around £430,000. I'll put up a chart for you guys to see what this looks like so you can kind of remember what I'm talking about, okay? So that's scenario one. So you've made that 330k. And notice in that chart that the return you got made up around 76.7% of your total pot. Now, scenario two is one where everything's exactly the same, except now you're paying a fee of 2% per annum. So you're still getting the same returns, but you're now paying a 2% fee per annum, okay? Up on the screen is another chart, and when you look at that chart, you notice rather than getting a £330,000 return over those 25 years, what you get instead is £160,000. And as you can see in that chart, you actually lose £170,000, which makes up nearly 40%, 39.5% specifically, of your entire portfolio. Again, up on the screen, I'm going to put those two charts side by side so that you can kind of see the impact that fees have on your investments. Essentially, in that scenario, what you've done there is you've paid 2% every year for the pleasure of losing 40% of your final portfolio amount in that hypothetical example. Isn't that crazy?
That is insane.
Yeah. So this is why fees matter. This is why we need to pay a very close attention to fees. So what are the different types of investment fees?
Well, the fees that you pay depend on the different type of investments that you make. So when you invest funds in the UK, you typically get a key investor information document, also known as the KID. In that document, you'll find what is known as the ongoing charge figure, also known as the OCF. The OCF includes the annual management charge and other ongoing expenses of running a fund.
Now, the OCF that you mentioned is similar to another number that you guys might be aware of, known as the total expense ratio, the TER, which some funds still publish where permitted. Okay. However, the OCF does not include certain types of fees known as your performance fee, as this will vary depending on how well a fund actually performs. Now, the OCF itself is quoted as a single annual percentage figure, and it's an accurate representation of what a fund's charges and an indication of how that might actually affect the fund's performance over time. Let's now unpack how that OCF fee is actually made up. Yeah, because that one single number is made up of other types of fees. So here are the main fees that make up the annual ongoing charge figure.
Okay, so the very first one is the investment management fee. This fee is deducted from your investment in order to cover the cost of managing the fund. For example, researching and selecting investments for the fund, etc. This fee forms part of the OCF figure.
Okay, so that's a really important fee worth mentioning. Yeah. The second fee that makes up part of the OCF figure is what's known as your admin fee. Okay, now this fee is deducted for administrative tasks of the fund that you invest in. For example, calculating the value of your fund daily. Okay, so someone actually has to do that work, or a team have to do that work. Or, for example, keeping a record of your investments. And for doing all that work, you are charged an admin fee. That fee is a part of your total OCF fee.
So third is the platform fee. This is charged because fund platforms offer you an online service that allows you to review your whole portfolio at any time. This could be via an app or a website and could include a number of interactive tools. So this is essentially what you pay for with a platform fee.
So basically, the more shiny the app is that you get,
yes,
chances are the more you pay in platform fees.
Exactly.
Got it.
Some providers charge this as either an annual percentage of your total investment or a flat fee on a monthly going basis. Note though that this is not part of the OCF figure.
So the fourth fee worth mentioning is dealing fees and stamp duty. Okay, so these are trading costs of buying and selling shares for the fund itself. So each time they add a share or take a share out, there is a cost attached to that.
Yeah.
And these costs are similar to the sort of costs that you might incur if you were buying, say, an Apple share or Amazon or Tesla. You obviously incur dealing costs. In the same way, when you invest into funds, these also attract the dealing costs. However, because these particular funds don't, buy and sell all the time, because they don't have so much activity, the fund dealing fees are a bit lower because those tracker funds don't change their investments that often. Okay, so again, worth mentioning that dealing fees and stamp duty do not form a part of the OCF figure. They are a separate fee by themselves. And later on in this video, we're going to be sharing with you guys a complete summary of these fees and how they all come together to give you your total investment costs.
Stay tuned for that.
Yeah.
Fifth is the performance fees. Now, some funds, typically ones that target absolute return funds, charge these on top of the OCF. These fees are typically 20% of the performance above the target for the investment manager. This is charged to better align the interests of the investment manager and the investor.
I know this fee pretty well because when I used to work in the investment business, this is a fee that investment managers, this is literally like their lottery money. They're literally waiting for this performance fee to be charged.
Wow, so you've got that inside knowledge.
Oh yeah, proper. Yeah, this is it. It's a lot of money if a fund does really well. The investment manager and the staff fund manager. Yeah. He himself is usually a he, but obviously you can have female staff managers. Would be waiting for a massive payout. Yeah.
So watch out for these in any funds that you invest in to see if they exist and what triggers them.
All right, so the next fee worth mentioning are entry and exit fees. Okay. Now, if you buy or sell things known as OICs, open-ended investment companies, it's an acronym, or index funds, or unit trusts from an investment company, you may have to pay entry and exit fees. However, it's worth mentioning that some providers actually do not charge you any entry or exit fees. Okay, and as we've mentioned with previous types of fees, this particular fee does not form a part of the OCF fee.
Okay, so the next fee is the advisor fee.
Big one, this one.
Yes. So if you invest your money with the help of a financial advisor, you will pay a separate fee for that advice. The amounts that you pay is decided between you and the financial advisor. You can either pay as a lump sum or spread your payments. The fees that you pay could be per hour or around 0.5% to 2% of the value of your fund. Yes, it's a lot.
That is a lot.
That
is a lot. And that's per year as well.
Yes, per year. But this fee is not part of the OCF figure.
Cool. So it might sound like we've covered a lot of fees, and we have, and we've done this deliberately to bring us to this point where we're now able to share almost a summary of all these fees so that you can remember it in a really simplistic way. Okay, so up on the screen is a simple equation to help you remember the total cost of investing your money. Okay, so the total cost of investing your money is made up of, number one, fund management fees. And those fund management fees are made up of key components. The first being the OCF, which we talked about earlier. Then there are transaction costs, such as your dealing costs and taxes, and then one-off fees. So all those form the fund management costs. Next is a second group of costs known as your platform fee that Mary spoke to you about earlier. This is for the cost of your app and your online platform to access your investment details. Okay, this is also referred to as the account fee. Okay, and the next final fee is the advisor fee. So if you're someone who takes on financial advice, and obviously not everybody does this, but if you do take on financial advice, that's an additional cost. So those three core elements of your fund management costs, your platform fee, plus your advisor fee make up the total cost of investing your money.
All right, so a quick pause to thank the sponsors of today's video. Pension B can help you combine your old pensions together into one simple online plan for free. They're helping over 799,000 customers become pension confident. I use Pension B to manage one of my pensions, and I love that they charge one single transparent annual management fee, which makes it easy for me to understand what I'm paying compared to other providers. Up on the screen is a simple chart that shows how simple their fee is compared to others. You pay between 0.5% and 0.95% depending on the plan that you choose. The fee then gets halved on the portion of your savings over £100,000, and they do not charge an exit fee.
To get started with combining your pensions in minutes or opening a new pension from scratch if you are self-employed, check out Pension B in the links below as well as above. As always with investments, your capital is at risk. Right, let's shift gears now to part 3. What are the typical charges for the different types of investments that you can make?
So the typical cost for investing in funds will differ depending on what you invest in. So for example, if you invested in a tracker funds, e.g. index funds and ETFs, you will typically pay between 0.1% to 0.85% annually. If you invested in active managed funds, you would pay between 0.75% and 1.5%. If you invested in investment trusts, you would pay between 0.8% and 1.8% annually in fees. So how should you compare investment fees?
The best way to compare investment fees is to look at the ongoing charge figure, the OCF figure that we mentioned earlier. This has become a standard across funds. So simply look out for what this figure is in the key invest information document, the KID, and see how that fee compares to funds from other providers for you to actually see whether you're paying a lot or whether you're getting a good deal for your investing. But it's worth reminding you that the OCF figure, as mentioned earlier, does not incorporate fees such as your performance fees, your dealing fees, but it does give you enough of a picture of the sort of fees you'll be paying on an annual basis.
So in conclusion, it's important to remember that all investments have costs. The money you lose in high fees compounds and keeps rising exponentially over time.
And finally, the performance of investments with high fees suffers relative to investments with lower fees over time. Altogether, we hope that this video has given you a really good picture of what investment fees are, why they matter for your investments, and how you can go about comparing them for the future. Guys, we'd love to hear from you guys in the comments. Do you typically compare investment fees before you make investments. Jump in the comments and let us know if you've got any questions, particularly related to this topic we've covered today on investment fees and why they're important. And if you enjoyed today's video and would love to see more investing videos like this one, do please make sure you subscribe to our channel and hit the notifications bell so that you know the very minute we publish our next investing video. Thank you guys so much for watching today's video, guys, and as always, in all things be thankful and seek joy.
Take care,
Take care,
guys.
people.
Bye.
Bye.